Hey there, welcome back. Ever feel like everyone's got a different hot take on how to invest?
Yeah, for sure.
Seems like you're all wrestling with
Yeah.
this whole movable versus immovable assets thing.
Right.
Well, today we're diving into those sources you sent over to
Yeah.
help you make sense of it all, especially
Okay.
with all this economic uncertainty these days.
It definitely feels like everyone's out there
Yeah.
either like shouting real estate is king or stocks are the only way
Oh,
from the
totally.
rooftops,
Exactly.
Yeah.
And our source kicks off
Yeah.
diving right into this whole debate.
Uh-huh.
And I was struck by how they brought up
Mm-hmm.
investors in China viewing Maotai,
Okay.
this like super high-end liquor company,
Oh, yeah.
as their version of an unbeatable stock.
Right.
Apparently, it's like their
Yeah.
gold standard,
Yeah.
so to speak.
It's a great illustration of how
Yeah.
what's considered a safe bet can differ across cultures.
Right.
Right.
But ultimately, the goal is the same.
Yeah.
People are
Yeah.
they're searching for assets they believe will hold
Right.
and ideally increase in value over time.
Yeah. Yeah.
But instead of getting caught up in the hype of what's hot right now,
Yeah. So we shouldn't be just picking a side like
Yeah.
team real estate versus team stocks.
the real question is,
Yeah.
what will hold value
Yeah.
in the future?
Right. Yeah.
Because
Yeah.
let's face it, today's star performer
Yeah.
could be tomorrow's biggest flop.
Totally. Ooh.
Yeah.
That sounds intense.
Yeah, it's about,
So what does that actually mean?
think of it this way.
Okay.
We're not just trying to keep pace with inflation.
Right.
We're looking to beat it.
Okay.
These high-quality assets
Yeah.
are the heavy hitters,
Yeah.
the ones that can not only withstand market volatility,
Right.
but actually grow your wealth over the long haul.
Okay. That makes sense. But how do we know
Right.
what these so-called high-quality assets
Right.
actually are?
Called the 721 model.
Okay.
And it's all about finding that sweet spot between stability and,
Oh, I love a good model.
yeah.
Okay. Break it down for me.
It's beautifully simple, actually.
Okay.
70% high-quality real estate
Okay.
in core cities.
Mm-hmm.
Think
Yeah.
globally desirable locations with limited supply,
Mm-hmm.
20% high-quality
Okay.
real estate
Yeah.
stocks,
Okay.
and 10% precious metals.
Okay. That it's not just any real estate.
Right.
It's got to be that prime location residential property.
Exactly.
No apartments or commercial buildings.
No.
Why is that so important? Well, think about it.
Yeah.
These core city properties
Yeah.
are in high demand.
Yeah.
Even during economic downturns.
Okay.
They're scarce.
Right.
People want to live there.
Yeah.
And that creates a built-in resilience to their value.
So even if the market takes a hit,
Yeah.
these properties are more likely to
We are, yeah.
hold their value
Mhm.
because of that constant demand.
Exactly.
It's like they've got this built-in safety net.
And that's where the 20% allocation
Okay.
to real estate stocks comes in.
Okay.
It allows you to tap into
Yeah.
the growth potential of the real estate market
Okay.
without having to deal with the headaches of actually owning and managing properties yourself.
Oh, it's like getting a slice of the pie
It is.
without having to bake the whole thing.
Yeah.
I like it.
Exactly.
Okay.
And then there's the 10% allocated to
Yeah.
precious metals.
Right.
Your classic hedge against inflation.
And economic uncertainty.
Right.
Think gold, for example,
Yeah.
which has historically held its value
Yeah.
during times of crisis.
So it's like having a little insurance policy
It is.
tucked away just in case things get really wild in the markets.
And this is where the concept of margin of safety comes in,
Okay.
which the source emphasizes.
Okay. Back up for a second.
Yeah.
What exactly is margin of safety?
Think of it as a buffer.
Okay.
It's about not putting all your eggs in one basket
Right.
and instead diversifying your investments
Yeah.
so that even if one area takes a hit,
Right.
you're not completely wiped out.
Okay.
The 721 model builds in that margin of safety
Okay.
by spreading your risk
Okay.
across different asset classes.
Okay. So it's like having a safety net
Exactly.
under a trapeze act.
Yeah.
You might still fall, but you're not going to
Exactly.
hit the ground as hard.
And this ties in with the source's emphasis on respecting market trends, but not being completely beholden to them.
Okay.
The 721 model encourages us to think long-term,
Yeah.
to build a portfolio that can weather the storms
Right.
and come out stronger on the other side.
So it's about playing the long game.
Yeah.
Not just chasing quick wins. It's
Right.
about building something sustainable.
Yeah.
Something that'll give you that
Chase
peace
your
of
beats.
mind in uncertain times. I
Yeah.
can definitely see the appeal of that.
Yeah.
But our source goes beyond
Yeah.
just the nuts and bolts
Yeah.
of the 721 model.
Yeah.
They get into something I find really interesting, which is this idea of wealth as a means to freedom,
Right.
not just luxury.
It's not just about the fancy cars
Exactly.
or the big house, right?
Yeah.
But what that wealth
Yeah.
allows you to do.
Exactly.
The choices
Yeah.
it opens up for you.
And they paint such a vivid picture with like examples like not having to wear a tie to work
Exactly.
or escaping that soul-crushing job.
Because ultimately, isn't that what we all crave?
Absolutely.
The freedom to choose
Yeah.
how we spend our time
Yeah.
and energy
Totally.
to pursue our passion,
Yeah.
spend time with loved ones,
Yeah.
and just live life on our own terms.
Absolutely.
Yeah.
It's about having the autonomy
Right.
to create a life you genuinely love.
Absolutely.
But the source also throws in
Right.
this dose of reality,
Yeah.
reminding us that creating wealth
Yeah.
is a competitive game.
That's right.
Yeah.
Resources are limited.
Yeah.
And in order to build wealth, you have to find a way
Yeah.
to stand out from the crowd.
Right.
It's not just about working hard.
Right.
It's about working smart.
Yeah. Yeah.
Finding your unique edge
Totally.
and offering something truly valuable that others are willing to pay for.
So how does money fit into this whole equation?
Well,
Our source uses this intriguing analogy of money as
Right.
social credit
yeah,
earned for past work.
it's a way of understanding money's role
Okay.
in the transfer of wealth.
Yeah.
When you create something of value
Uh-huh.
for society,
Yeah.
you earn money.
Yeah.
And that money
Right.
represents a claim on goods and services.
So it's like society saying,
It is.
hey, thanks for your contribution.
Yeah.
Here's a token of appreciation you can use to
Exactly.
get what you need.
It shifts the focus from simply hoarding cash
Right.
to actively creating
Yeah.
value that benefits others.
Okay.
Yeah.
I like that framing. It's not just about taking from this system.
Right.
It's about contributing something and getting those social credits in return.
Yeah.
But then the source goes on to say
Mm.
something pretty controversial, that a steady salary can actually be dangerous. Wait, what?
Right.
Most of us rely on salaries, right?
I know. It sounds counterintuitive,
Yeah.
but think about it. When you're relying on a salary,
Yeah.
you're essentially trading your time for money,
Right.
often in a job that might not truly fulfill you.
Yeah.
It's easy to fall into that trap of thinking,
Right.
well, I need this paycheck, so I'll just,
Yeah.
stick it out for now.
Yeah.
And then now it turns into months,
Yeah.
then years.
It's like getting stuck in that
It is.
golden handcuff situation.
Yeah.
You get comfortable, maybe even complacent, and suddenly those big dreams of freedom start to feel out of reach.
Exactly. And that can lead to lifestyle inflation.
Oh,
You get a raise, so you upgrade your car.
yeah.
Maybe you move to a bigger place, start taking fancier vacations.
Exactly.
And suddenly you're
Yeah.
even more dependent on that steady paycheck
Right, right.
to maintain this new, more expensive lifestyle.
It's like a hamster wheel.
It is.
You keep running faster and faster,
Yeah,
but you're not really getting anywhere.
that's a great analogy.
Yeah.
And the source actually takes it a step further,
Okay.
comparing salaries to, get this, heroin.
Whoa. That's a pretty
And
strong comparison.
But it really drives home the point about
Yeah.
the addictive nature of a steady paycheck.
Okay.
You get used to that regular income,
Yeah.
and it becomes hard to break free,
Right.
even if you're not truly happy.
Okay.
The source argues that a better approach is to focus on earning in large, infrequent chunks.
So instead of that constant drip of income,
Exactly.
they're getting these
Yeah,
big bursts of money.
exactly. This forces you
Okay.
to think long-term,
Right.
to be more strategic with your finances.
Yeah.
It prevents you from falling into the trap of
Yeah.
lifestyle inflation
Right.
and encourages you to focus on building wealth that generates passive income.
It's about building a system that works for you,
Yeah,
even when you're not actively working.
exactly.
Kind of like how
Yeah.
those high-quality assets in the 721 model
Right,
are designed to appreciate over time
Right.
and generate that passive income.
right. It's about taking control of your finances
Yeah.
and creating a life where you're not
Right.
constantly chasing the next paycheck,
Yeah.
but instead
Yeah.
building a foundation that allows you to pursue your passions
Yeah.
and live life on your own terms.
Yeah.
Now, there's another layer to this whole
Here.
wealth creation equation that the source delves into,
Okay.
And that's the impact of taxes,
Okay.
specifically high marginal tax rates.
Okay. I'm not an economist,
Right.
but I know
Yeah.
high taxes are generally frowned upon in the
Yeah.
investment world. Why is that?
The argument is that high marginal tax rates can actually discourage
Right.
risk-taking
Yeah.
and stifle innovation.
Saga.
Think about it.
Yeah.
If you know that a huge chunk of your earnings
Yeah.
will be taxed away,
Right.
it might make you less willing
Yeah.
to take a gamble on a new business venture
Yeah.
or invest in a risky but potentially lucrative project.
It's like taking away the incentive
It is.
to push boundaries
Yes.
and try new things, especially when those things require
Exactly.
a lot of upfront investment
Yeah.
and have a high chance of failure.
And that can have a ripple effect
Right.
on the whole economy.
Yeah.
Fewer people taking risks
Yeah.
means fewer new businesses,
Right.
fewer breakthroughs,
Yeah.
and ultimately less economic growth and opportunity
Right.
for everyone.
So it's not just about individual wealth.
Sure.
It's about creating an environment where
Yeah.
innovation can flourish and everyone has the chance to
Right.
succeed.
Exactly.
But where's the balance? How do we ensure
Right.
fairness while also encouraging people to take those risks and build those businesses
Yeah.
that benefit everyone?
That's the million-dollar question.
Yeah.
It's a complex issue
Yeah.
with no easy answers.
Right.
But it highlights the importance of
Yeah.
understanding the complexities
Right.
the financial system
Yeah.
and finding ways to build wealth that align with both
Right.
market realities
Yeah.
and personal freedom goals.
Okay.
And that brings us back to
Yeah.
the source's key point about
Yeah.
shifting our perspective
Yeah.
on wealth creation.
Okay.
They encourage us to see money
Yeah.
as that social credit
Right.
earned by creating something of value
Yeah.
for the world.
So it's not just about
It's not.
how much money you have.
It's about,
It's about how you earned it
yeah,
and what you do with it.
yeah,
It's about finding that
Yeah.
sweet spot where your passions
yeah,
and skills
yeah,
align
yeah.
with a need in the world.
It's about finding that intersection where
Exactly.
your talents and interests meet a real need in the world.
And it's not always about some grand,
Yeah.
world-changing idea.
Right.
It could be something small.
Yeah.
Something seemingly simple, but if
Yeah.
it solves a problem
Yeah.
or brings joy to others,
Right.
it has value.
Yeah.
And that value translates into
Yeah.
those social credits we call money.
It's about finding your own unique
It is.
contribution, big or small, and putting it out into the world. Because at the end of the day,
Yeah.
isn't that what a fulfilling life is all about?
Yeah.
Using your gifts
Yeah.
to make a positive impact,
Yeah.
to leave the world a little bit better than you found it.
Absolutely. Yeah. So as we wrap up this
Yeah.
deep dive, I'm feeling inspired, energized, and ready to go out there and create something meaningful. And for anyone listening, I hope you're feeling that too.
I hope so.
Yeah.
Remember, building wealth
Yeah.
isn't just about accumulating money. It's about
Right.
creating a life
Yeah.
of freedom, purpose, and impact.
Mhm.
And that journey begins with
Yeah.
taking that first step,
Yeah.
with believing in yourself
Yeah.
and your ability to create
Yeah.
something truly valuable for the world.
So go out there,
Yeah.
find your passion,
Build your safety net.
build your safety net,
Yeah.
and create something amazing.
Yeah.
We can't wait to see what you do. It really makes you think, huh,
Yeah.
about the potential we all have
Uh,
to create something,
Yeah.
not just for ourselves,
Yeah.
but for the world around us.
It does, yeah.
Yeah.
And this is where the 721 model comes full circle.
Okay.
By building that financial foundation,
Yeah.
that margin of safety, you free yourself up
Heck. Yeah.
to pursue those passions
Yeah.
and create that value
Yeah.
without being constantly worried
Yeah.
about where your next paycheck is coming from.
It's like that safety net allows you
Exactly.
to take bigger risks and
Yeah.
swing for the fences, knowing
Yeah.
you've got something to fall back on
Yeah,
if you don't quite hit a home run.
exactly. It's about creating the space for
Yeah.
creativity, innovation,
Yeah.
and ultimately impact.
So if we think back to that analogy
Right.
of money as
Yeah.
social credit
Yeah.
earned for creating value,
Yeah.
what are you
Right.
uniquely good at creating
Hmm.
that society will value in the future?
That's the question, isn't it?
Right.
And it's not always an easy one
Yeah.
to answer.
Right.
But I think it starts with looking inward,
Okay.
understanding your strength,
Yeah.
your passions,
Uh-huh.
and the problems you're uniquely equipped to solve.
It's about finding that intersection where your
So,
talents and interests
yeah.
meet a real need
Yeah.
in the world.
And it's not always about some grand
Yeah.
world-changing idea.
Yeah.
It could be something small,
Yeah.
something seemingly simple, but
Yeah.
if it solves a problem
Yeah.
or brings joy to others,
Yeah.
it has value.
Yeah.
And that value translates into those
Yeah.
social credits we call money.
It's about finding your own unique contribution,
It is, yeah.
big or small, and
Yeah.
putting it out into the world.
Because at the end of the day, isn't that what a fulfilling life is all about?
Yeah.
Using your gifts to make a
Yeah.
positive impact, to leave the world a little bit
Yeah.
better than you found it.
Absolutely.
Yeah.
So as we wrap up this deep dive, I'm
Okay.
feeling inspired, energized,
Right.
ready to go out there and create something meaningful.
Good.
And for anyone listening, I hope you're feeling that too.
I hope so.
Right.
Remember, building wealth
Yeah.
isn't just about accumulating money. It's about
Right.
creating a life
Yeah.
of freedom, purpose, and impact.
Yeah. Right.
And that journey begins
Yeah.
with taking that first step,
Yeah.
believing in yourself
Yeah.
and your ability to create something truly valuable
Yeah.
for the world.
So go out there, find your passion,
Yeah.
build your safety net,
Yeah.
and create something amazing.
Yeah.
We can't wait to see what you do.